Hi, I'm Craig Rollins, and we're going to be talking about recognized gains. Gain is basically achieved when you buy something at a lower value and you sell it at some point in time later, typically 13 months or longer, for an increase in price or an increase in value. The difference between what you bought it for and what you sold it for is considered a gain. For an example, let's say that you bought a duplex and you paid $100,000 for that duplex. Well, several years later, hopefully the economic situation and conditions have changed and you're able to now sell that same duplex for $150,000. The $50,000 difference is your gain. Now, a gain can be achieved when you sell anything. It could be an appreciated asset, it could be land, animal, building, stock, investments. It doesn't matter. If there is a gain or an increase in the value from what you bought it for what you sold it for, that is considered a gain. An example would be when the seller of the duplex I mentioned earlier chooses to utilize IRC code 1031 for a tax-deferred exchange of real property for like-kind property. Though the assets may have appreciated over time, the gain itself is not recognized at the time of sale, but deferred to a later date. Gains can also be unrecognized on assets held in certain tax-qualified plans like a 401k and individual retirement account, IRA. So this is considered a gain. Now, it's unrecognized until you actually receive the money. Recognized gains is when you receive the proceeds, it's in your bank account, you can spend it. There are certain tax provisions, though, in the Internal Revenue Code that allow for that gain to continue to go unrecognized or be deferred to a later date. Just the Internal Revenue Code's rules chooses not to recognize that gain at that time. One good example of this would be the duplex that we talked about earlier. If the individual that sold the duplex decided that they wanted to defer the gain, not recognize it to a later date, they could use Internal Revenue Code 1031 for a tax-deferred exchange. This would allow them to take the $150,000, which would be held in escrow by a qualified intermediary or a QI, until an appropriate or like-kind property is found. Once that property is found within certain time limits, they can take the entire $150,000 and put it into the new home or the new duplex or property or whatever it is that they're looking for. Therefore, they have not recognized that gain and they don't need to worry about paying any of the taxes on that gain until they sell this new home, unless they do a 1031 again.